This is all about the allowance. And moving forward, I would like to talk about something about the direct loans. Again, actually, I mentioned it last week or the week before last week, I think. I also would like to say this direct loan account should be very popular because it is a very there's something you need to aware to avoid the tax penalty tax liability. Some of other ways you can use to have a well cash flow plan for not only yourself but also your company. So you should this topic should be popular, but I don't know why a lot of people do not aware of this direct loan account. So let's go through it with some general tips. The first is you should know that a director can borrow fund or money from the company. Actually, not only the directors but also the employees as well. So, if the money you would like to borrow from the company is less than 10,000, there will be no obligation to pay interest to your company, or your company do not have to charge you interest. And if it is above 10K, the interest payable will be at the rate 2%, which is still very generous compared with other financial institution, right? But it is a very cheap loan. Maybe you would like to borrow money from your company, but there is something you should aware about is the repayment time. The 9 months and 1 day from your accounting period, and during this time you should make the repayment. You should pay the money back to your company. Otherwise, you are entitled with the penalty tax charge under the S455 rules. So, for example, I'll give you an example. For example, you borrow 10K from your company, right? And then your company accounting period and on at 31st of March 2019, let's say. And before which day you have to pay back this 10K to your company, it's 9 months plus 1 day, means 2nd of January 2020. 9 months plus 1 days. What if you do not pay this 10K back to your company? You will entitled with the penalty tax, which not you, your company. Sorry, this is a penalty tax liability. Your company subjects to the tax rate will be 32.5%. And but do not worry about it. This penalty tax is recoverable, even though you are not pay the loan back to your company within 9 months and 1 + 1 day. As long as you repay the loan back to your company in the future, and within that accounting time, tax year, your company can claim back this 32.5% penalty tax back anytime, as long as you repay the money back to your company. So there is a tricky point some people ask me before. They say that, what if I pay the money back to my company within the time 9 months and 1 day, and then in the very next day I withdraw the same amounts? Or so what do you say? The HMRC will say this is a certain bread and breakfasting rules, means that after the repayment, after you pay back the money to your company, within the 30 days, if you withdraw the amount again, the HMRC think that this loan is not really paid. So means that you still liable with the company will still liable with the penalty tax 32.5%. But you do not need, you shouldn't worry about too much about the date of the repayment. No matter if the directors or employees, you can borrow the money up to 10 years from the company and then repay it back in turn 10 years time. And this penalty tax 32.5% will be recoverable anytime you repay the money back to the company. Okay, let's see an example. So let's say Mr. X own 100% shares in Y company, and Mr. X withdrew 12,570 as a salary, and Mr. X has lent money to the Y Limited and received an interest of 6K from the company. The company also make a profit of 30K and distributes the dividends to Mr. X 100%. So let's say it is very easy for us to calculate. The total income for Mr. X is 48,500. With this total income, we can say that Mr. X is a basic rate taxpayer. So I would like to demonstrate it, his income in different type of the income, in different type. The first is the salary. You can say Mr. X is very smart. He tried to use up his personal allowance, 12,570. So because this salary is covered under the personal allowance, so Mr. X has no tax liability with the salary. But again, he need to pay the employee NI. And another one is the interest income is 6,000. So in this 6,000, he can split into two parts. The first 5,000 is starting rate saving with a zero rate, so it's no tax payable liability. And the second part is a 1,000 personal saving allowance, still no tax liable. So with this total 6,000, Mr. X has no liability for his interest income, I would say. And because Mr. X is a basic rate taxpayer, so he used up all the interest income allowance. Yeah, he's entitled with 6,000 in total. And what kind of the income tab is a dividend? Mm, Dividend is Mr. X has 2,000 tax-free dividend income, so he used this up. So all in total, you can say with this total income, 20,570 are tax-free. He do not need to pay any tax for this income. So the tax liability for the rest income will be only £2,094.75, because the rest of the income, you can use the 48,500 deduct 20,570 times 7.5%. It is not 20%, it is 7.5%, because Mr. X withdrew the dividend. The rest of the income are all coming from the dividend, and the basic rate taxpayer dividend rate is 75%. And the tax rate 7.5% might be changed from next tax year. I will update it to you after the chancellor announced the new tax rate.